Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a company called Skipper Limited. We're going to go through their recent result and the con call summary. And then obviously before I get into that, we'll go through their business model or try to understand what do they actually do, right? So if you look at Skipper Limited, they're into manufacturing, power transmission and distribution structure, telecom towers, and then they manufacture polymer, pipes and fittings, and they have these EPC projects also. If you divide their business into various segments, the first obviously comes the engineering, where again they make these power transmission towers, railway structures, power distribution poles, MS and high tensile angles, monopoles, all these things, testing stations. So that is their main business. Then they have infrastructure where they make do tower and substation EPC, water EPC, telecom EPC that they take. And the last is the polymer where they do this UPVC pipes, CPVC pipe, HDP, various kinds of pipes they manufacture. So that is their whole business model. And if you look at their overall revenue growth for the Q4, right, it grew at a decent rate of around 30% to 1,667%, and PAT was up by almost 70% to 76 crores. And if you look at the full year revenue, increased by almost 20% to 5,553 crores, and PAT was up by almost 46% to 207 crores. And obviously, they got the operating leverage because of two reasons. First, their capacity utilization, hit almost 90% plus up. And that is actually quite a good sign whenever a company whose majority of the cost comes from fixed cost, right? Because when the capacity increases, the fixed cost still remains the same and they get a better operating leverage. And obviously, because they get a better operating leverage, their margins also improve. Because if you look at the EBITDA margin, it improved from 9.8 to 10.3%, and PAT margin improved by almost 3.1 to 3.7%. And if you look at if you divide their revenue as per the segment, right? So the engineering segment contributed around 4,359 crores, which is a growth of almost 24%. Polymer contributed around 500 crores, growth of almost 20%. Infra contributed to around 694 crores. There was no growth number mentioned. And if you look in terms of order book, right, which is very important in such kind of business because they are able to manufacture and sell only if they have an order, right? So at the end of the year, FY26, they had an order book of around 8,502 crores. And management said that for the first time in their history, they have a record bidding pipeline of around 33,000 crores. So, I mean, that is actually quite huge. Let's see how much they are able to convert. Trust me, if they're able to convert even half of this, that will be quite big for them. And the other thing that they said, the main tailwind that they're coming, they're getting is from the transmission and distribution sector, the way the demands are increasing. And in terms of geopolitical impact, if we see, we do not see in terms of their, overall revenue growth or margin. But what happened is at the back of it, their export declined from 54, declined to 54 crores from 175 crore last year. But overall revenue did not impact that much. And they're hoping that these things will get better. So obviously the revenue growth is, good. They're getting the operating leverage because of the capacity utilization. So we already know that they're at the top of the capacity utilization. So for them to grow further, the only option is to increase their capacity or set up a new plant. So let's see what they're trying to do, right? So their current capacity is around 450,000, 375,000 metric tons per annum. They're adding around another 75,000 metric tons per annum, which is an increase of almost around 20%. This increase should go live in June 2026. But obviously, as testing will go, and the capacity utilization will slowly ramp, the meaningful contribution to the revenue will only come from Q3 of FY27. That one should need to account for. Okay. So obviously, we see that they're running at the full capacity and they're adding only 20% of extra capacity, which will, get utilized at the end of the year. So if you take it mentally, I don't think the revenue growth should not be more than around 20%. So, and if you look at the management guidance also, they were actually quite conservative. They said that they will grow their revenue by 15% and the bottom line will grow by 30%. And the reason the bottom line will grow because they are at the full capacity. So over here, if I look at the business is almost running at the full capacity. Yes, they are increasing the capacity, but it's only 20%. So we can see the visibility of growth only for the next 1 year. But after that, we don't know what is going to happen, right? Because if someone has a bidding pipeline of almost 33,000 crores, I thought they would have been more optimistic and, try to say, okay, this is what we're going to do and we'll see in the future. We might add so and so. But No such things were given. The management said this is what is happening. They're going to add another, 75,000 metric tons per annum, which are going to go live from June 2026. And we're going to grow by revenue by around 15% and profit by around 30%. That's all there. So for me, the growth is tapering down. I think anyone who's looking into it or invested into it, should lower their expectation, because if the growth comes down, it's not actually overall good sign, because when the sales come down, generally, the company stops making money for the shareholders. Only if we look what is going to happen in the future, if the company increases their guidance, if the company does new capex, then only things will change. So that's all from my side. And if you guys like this analysis, please do hit like and subscribe to my channel. Thank you and God bless you.